Welcome back to U.S. Farm Report this weekend. Brian Grady of Comstock Investments, as well as Angie Setzer of Consus Ag Consulting, joining us this weekend. Brian, I'll start with you. We had a lot of momentum in the market leading up to Thursday, but Thursday was a down day across the board. What was pressuring prices later in the week?
Well, soy meal futures absolutely got hammered. We had a port deal in Argentina, so that had been giving soy meal some support. And once that ball got rolling, pretty much the wind came out of the sails of everything, and we saw massive fund liquidation.
Yeah, massive liquidation. But leading up to that, Angie, we had quite the rally, especially in soybeans and wheat too. I mean, is all of this really driven by the anticipation for China to come and buy?
I mean, obviously the China story is the easy one to talk about, but there's been a handful of other factors at play that have helped. We've had October 21st, the European Union Commission decided they were going to go forward with the European Union deforestation regulations. There'd been a lot of thought that we would see that can kick down the road. They are giving some leniency on following through with the new rules of play, but Brazilian soybean meal won't work as well into Europe. Brazil basically exported around 11 million metric ton of meal into the EU. The US and Argentina would definitely qualify for that gain in business if we were to see it. And so that helped too. What Brian said, we basically had this kind of trifecta in soybeans that helped push things along. We had the EUDR decision on October 21st. We had the Trump-Xi meeting on October 30th. And then we had talk that we were going to see, one of the largest global suppliers of soybean meal and someone who has become a big exporter of whole soybeans, Argentina, end up with a port strike and have some issues there. We saw some pretty extensive fund buying as a result, some big fund coverage, and saw it unwind as we kind of got a bit more level-headed about what the China trade deal will look like as we move forward. We obviously saw the port strike resolve itself, and some folks are kind of getting their more level-headed mindset too about what's going to happen with Europe.
Okay, Brian, my next question for you on China, it's twofold because we know the first shipment of sorghum was heading to China this week. That's according to the U.S. Grains Council. So my first question is there any indication that China is buying more soybeans? Because we heard there were rumors they were actually buying from Brazil this week because of the tariff. But also, when you look at the 13% tariff that's still on beans, does it make U.S. beans more expensive than Brazil? And do you think China can really buy 440 million bushels of beans over the next few months?
Yeah, so first off, the 13% tax, there's a 13% VAT or value added tax that applies to both the US and to Brazil. So that's in place and that won't change. Brazil has a 3% most favored nation. The United States also has 3% most favored nation. There's still a 10% tariff tied to fentanyl that is on because of US duties on fentanyl. For China. And so that's the difference. So the effective rate there is 13% for Brazilian shipments and or 16% for Brazilian shipments and 26% for the United States. So just to clear that one up. Now, whether or not Brazil is buying or not, it's going to be all from commercial firms as long as we see U.S. prices above Brazilian prices. So the tariff comes into play, the difference there, that 10% difference. And also, we've seen the export price, the flat export price from both the U.S. side and from Brazil, from ports. The U.S. has moved premium to Brazil over the past several days. And so that comes into play as well. Until that changes, we will see just commercial buying from China. And that, I think, is critical. Now, soybeans out the door or soybeans out the door. It doesn't matter. It's still demand. It's how the Chinese will use them. And I think that one's a critical one. So if it's going to commercial firms, that's going to be crushed and processed and go into the animal feed, immediate use there. And if it's from state-owned firms, it's likely going into state-owned reserves.
Thank you for clearing that up. Great explanation there. Thank you, Brian. Angie, let's talk basis. You keep a close eye on this. Is the cash price telling us demand is better than actually what we thought for both corn and soybeans and wheat too?
Well, that was part of what drove this rally to begin with, is we saw the cash market heat up pretty substantially here across the Eastern Corn Belt. Started it, soybean harvest wrapped up probably the second week of October relatively quickly. We had really dry beans coming off. We had a lot less flowing into the marketplace than expected. You started to see bean basis firm very, very quickly. You had several different major processors, in Claypool, here in Michigan, our Ithaca processor, Morristown, even out in Illinois with Decatur announcing that they were going to offer free DP, through the end of September if you wanted it. Basically, bring your beans in. We're not going to charge you anything for storage. Almost something that's completely unheard of. And so that was part of what spurred this market higher. And it even got more legs underneath it once we had the Trump G meeting, once we started thinking that we might see this big surge in demand here over the next couple of months. We've since seen it calm down. We had a bit of firmness in the soybean market here as we rolled to the January. You saw most processors gave about an extra nickel or so in that roll. They didn't take the full batch of carry, that you could say. And we've seen since then, though, with the flat price rally, with the futures market moving higher, with spreads coming in, we've seen the strength in basis calm down. And so I think that'll help, maybe help go as we go forward. There is some concern here. There was leading up into today, and the sell-off that we saw on Thursday, that we'd lose rest of the world business too, because as Brian said, you saw weakness in Brazil, you saw firmness in the US. That's calmed down. We're not seeing the firming. We're not seeing these end users chase bushels like they were even a week ago. And on the corn side of things, same sort of deal. If you're in an area that has far more production than you've seen before, there's some folks across parts of the Dakotas, parts of the Southern Plains, places like that where you're seeing basis continue to widen. But elsewhere, especially in the Eastern Corn Belt, we're seeing some pretty big signs of less corn than what was anticipated. Your bid ask is exceptionally wide, probably the widest I've seen it, almost 30, 40 cents in some places between what's posted and what's being paid. Wheat, no one's really actively trading it. The Gulf stayed pretty flat. So basis as a whole, we've seen some real big moves in basis on the soybean side that caught the market's attention early on. That's calmed down. Corn is showing some signs of strength if you're not in an area where there's a surplus, but nothing too crazy just yet. And wheat has pretty much stayed relatively stagnant, as to be expected, because most everyone's moved the wheat they want to ahead of corn and soybean harvest.
Well, USDA says it will release its November WASDE report. Brian, what valuable data did we lose in October? And do you think that impacts USDA's yield estimates coming up this month?
Well, we lost the objective yield survey stuff that came out of fields. So USDA goes into fields on a month-to-month basis starting in September. We lost the October data, so that's thrown out. We now pick up in November. The problem is that harvest is really far along in most of those states. And so now we have a gap there between September and November that USDA has to fill. So I think the question is, do they do more farmer surveys? And once the harvested data comes out of fields and there isn't any more, then they turn to field tickets and scale tickets and stuff like that for that data on the harvested side of things. So there is a gap. We'll see. History says that USDA doesn't make a whole lot of changes typically in the November report. And so while we're switching from September to November, history also tells us they don't make a lot of changes in October. And so that there shouldn't be, from a historical standpoint, a big change. We will see. The biggest came in 2020, and that was the derecho year. So that wiped out complete acres. I mean, fields that were completely lost that year. We didn't have a good finish, obviously, but it wasn't comparable to 2020, in my opinion, from that perspective. And so we'll see. It's going to be interesting to see how USDA bridges the gap. Now, in 2013, when we had the government shutdown and we lost the October report, they did not issue a December crop production report for corn and soybeans, which is typical. Usually it skips from November to the final production numbers in January. And I think we'll probably see that this year, though they could, I guess, make special exception this year and issue those estimates in December again. But I don't think so, because there won't be harvestable data in the fields any longer at that point anyway. So it basically won't make a difference.
Angie, it just seems like a huge lift to get these reports out this month, considering we didn't have that in October. I mean, how much confidence do you think the trade is going to have in these upcoming reports, knowing that, the government shutdown is going to impact this in some way?
Well, the main thing I do want to throw out is that they were still collecting the data. If you ask Lance, he clarified here this week from NAS that they were still collecting, they weren't analyzing. So it is quite the lift, I think, because you're not analyzing as it's coming out. You're not doing all of the things that you normally would. We're not going to have sort of that September to October. And as Brian said, it is unusual to see major shifts, and I wouldn't be the least bit surprised to see them slow roll any type of major shift until we get more in the way of stocks data from December 1st or something like that. But it is a big ask, and I think no matter what, you're going to have some folks with one side of market identity. If it comes out more bullish than expected, then your market bears are obviously going to say that the shutdown had something to do with it, and likely vice versa. I'm going to take it as I take any other report from the USDA with a grain of salt, and we'll see what they have to say. It's going to be really interesting too, or I think there is some concern that you could see. I don't want to use the term, a manipulation of data, but are they going to provide us an optimistic trade outlook that maybe doesn't fit the bill once we move forward in soybeans or something like that? Like, yeah, there's going to be a ton of questions asked, and the more that we see the administration kind of work to involve themselves in certain prices and things like we saw with beef and grocery store value. We keep hearing about getting grocery store prices down and things like that. Like, there's always going to be some questions and some skepticism, and we probably will see more of that, get heaped in as we work our way ahead.
Brian, real quick on the cattle front, President Trump saying again this week that he will bring beef prices down. Is that still what's weighing on prices? And how is boxed beef performing through all of this?
Yeah, so the cattle market got extended too far to the upside, to be honest with you. A lot of speculative money that flowed into the long side, both in live cattle and feeder cattle, and we just saw exceptional price gains, and it overdid it to the upside. President Trump's comments obviously didn't help matters, and took the wind out of the sails, so to speak, and just once we got the ball rolling to the downside and we saw liquidation pressure, that speculative money came out in a big hurry. And that's typical for what happens when you make all-time highs in markets. It doesn't matter whether we're talking cattle here or other markets. When they make all-time highs, you can go back and look at the charts, and it runs up really quickly and it falls even more quickly. And so that's the type of price action that we saw unfold and are seeing unfold. Now, the boxed beef market, I think, it fell well below its all-time highs. Stabilized some and has now come back a little bit. And we're seeing the similar type of action in the cash cattle. It's just that we have the futures so disconnected from the market fundamentals right now. It's all a money flow game. And so day-to-day price action is more based on money flow than it is on the fundamentals.
All right, Brian, thank you. And Angie, thank you so much for joining us this weekend. Well, we talked a little bit about yield, but where is the garden spot this year in the U.S. for growing corn? We take you there next.